Hi, I'm Jack Mohr, Research Director for Action Alerts Plus. I'm here with Portfolio Manager Jim Cramer. We just got back into a name that we had owned previously, I think $10 higher we sold out of. Panera, we love it. I can't believe it's come down this much.
Right.
But it's, I mean, we've talked about Panera 2.0, but I mean, this is an exciting company. We were just talking about next year and how the comp acceleration is just so clear.
Right, and I think that you have to recognize that Panera's been a big buyer of their stock because they do have great free cash flow. It was a terrific trade that we got in Panera, and I am surprised that it could come back down, but one of the things that this market has done is given you a lot of surprises. And if you're disciplined, as we're trying to be, and if you have that big cash position that we have, you get an opportunity like Panera where 2.0 is definitely working, and as they roll out 2.0, which has there's lots of room for 2.0, and as they integrate a lot more technology, then you're going to be able to see better numbers year over year with a much smaller supply of stock out there.
Right.
So is it perfect? You need, I mean, Panera's not as well run as Starbucks, which we just bought more of. Panera arguably is a turnaround, even though it was never really bad, but they're going more natural and organic. That's really important. Yep. It's not that expensive versus historically the way Panera is, and they've got a lot of raw costs coming down and gasoline's coming down.
Yeah, I mean, you hit it on the head. And I think that it's interesting to compare it to Starbucks. I think that's what it aspires to be. And right. I do think that the one thing that they're doing extremely well with Panera 2.0, it's not so much about driving traffic, because they had actually very strong traffic. It's about throughput. They've had huge throughput issues. Right. And now with all the technology, and as you see with like mobile pay and whatnot, you've seen it play out at Starbucks. This is going to apply to Panera, and they're also on this national marketing campaign, so you combine
right,
even
that
more
campaign
traffic.
is big,
huge. And it's right. The first time they've done this. So I think that you got more traffic, you got better throughput, you have cost-saving initiatives, you have new CFO, new management team. It just is. It's coming together. It might be a little choppy, but I think long-term, I really feel confident.
And I think one of the things that we've been trying to do is recognize that the market's very volatile, and if Panera comes down 5, you're going to see us buy more. We're not going to pay above our basis because we have a nice basis, but I think people have to recognize the market is incredibly volatile, and what we're looking at, whether it be Thermo Fisher, whether it be a Starbucks, whether it be a Starwood, everything is on the table in terms of what we're going to buy, like ETP. I mean, it's come down so much. We have to recognize, okay, yes, did we buy some stuff too high? Well, we obviously saw a decline coming. We wouldn't have such a big cash position, right. But we got out of Schlumberger 20 points ago. Should we have gotten out of all the oils? Well, we did try to reposition some of the oils, but you just have to take advantage of the volatility now to be able to accept the fact that stocks have come down huge and buy stocks you like, and if they come down huge again, like a Kraft Heinz, we're going to get some more.
Yeah, no, there we go. Thanks, Jim.